Financial Accounting Chapter 17. Introduction. The use of financial evaluation techniques to determine which of a range of possible alternatives is preferred. Financial appraisal usually refers to the use of discounted cash flow techniques, but it may also be applied to any other approaches used to assess a business problem in financial terms, such as ratio analysis, profitability index, or risk analysis. Compare. Economic appraisal. More on investment ratios. The term is enough to curl one hair, conjuring up those complex problems we encountered in high school math that left many of us babbling and frustrated. But when it comes to investing, that need not be the case. In fact, there are ratios that, properly understood and applied, can help make you a more informed investor. Interpreting the balance sheet. A company balance sheet, also known as a statement of financial position, reveals the firm assets, liabilities, and owner's equity, net worth. The balance sheet, together with the income statement and cash flow statement, make up the cornerstone of any company financial statements. If you are a shareholder of a company or a potential investor, it is important to understand how the balance sheet is structured, how to analyze it, and how to read it. Valuation through expectation. Expected value, also known as EV, expectation, average or mean value, is a long-run average value of random variables. It also indicates the probability-weighted average of all possible values. Valuation through expectation. Expected value is a commonly used financial concept. In finance, it indicates the anticipated value of an investment in the future. By determining the probabilities of possible scenarios, one can determine the EV of the scenarios. The concept is frequently used with multivariate models and scenario analysis. It is directly related to the concept of expected return. Valuation through market values. Market value, also known as OMV, or open market valuation, is the price an asset would fetch in the marketplace, or the value that the investment community gives to a particular equity or business. Market value is also commonly used to refer to the market capitalization of a publicly traded company and is calculated by multiplying the number of its outstanding shares by the current share price. Market value is easiest to determine for exchange-traded instruments, such as stocks and futures, since their market prices are widely disseminated and easily available, but is a little more challenging to ascertain for over-the-counter instruments, like fixed-income securities. However, the greatest difficulty in determining market value lies in estimating the value of illiquid assets like real estate and businesses, which may necessitate the use of real estate appraisers and business valuation experts, respectively. Accounting policies and financial appraisal. Accounting policies are the specific principles and procedures implemented by a company management team that are used to prepare its financial statements. These include any accounting methods, measurement systems, and procedures for presenting disclosures. Accounting policies differ from accounting principles in that the principles are the accounting rules and the policies are a company's way of adhering to those rules.